Hello and welcome to CRUX Investor. We're going to be speaking with Darin Labrenz, the CEO of Pure Gold, in just a moment, and catch up with him with regards to what they've been up to since we spoke earlier in January and looking forward to 2019. Hello, Darin. How are you?
Doing very well. How are you?
Not too bad, not too bad. Good to speak to you again. We caught up in January and you let us know what you were up to then. A few things have happened since then, so maybe you start off and give us a couple of minutes on where things are today, and then we can get stuck into your plans for this year.
Sure. As a reminder, our project is in the heart of Red Lake, Madsen Red Lake Gold Project, and we have had a very eventful 2019 thus far. Started out with a resource update that came out in early February. That resource update outlined a mineral resource that's 2.1 million ounces at 8.9 grams per ton in the indicated category, and another 470,000 ounces at 7.7 grams in the inferred category. So a very robust, strong resource. On the heels of that, we released a feasibility study for the core part of the resource, the main part of the Madsen deposit, if you will. And that feasibility study outlined a robust, long-life mine with a very low capital hurdle of 95 million Canadian, and after-tax NPV about $247 million, after-tax IRR of 36%. Importantly, that feasibility study really is the base case, if you will, of the first phase of our development plan. To highlight the growth and scalability of the project, we put out a preliminary economic assessment on some of the discoveries we've made over the last several years. Those include Russet South, Fork, and Wedge. And those show an additional 4 years of mine life. They're shown as an end of mine life extension. They add $51 million in after-tax NPV. But we think there's a real opportunity here to continue to grow the resources in those areas and look at potentially bringing them forward into mine life and looking at scaling up the asset.
Right. Okay. So tell us, actually, let's step back a little bit on some of the numbers. So tell us what you picked these assets up for, and when was that?
Yeah, so we've had the Madsen Red Lake project for 5 years. We've consolidated the land position over that time period, and our net cost of acquisition was $8.5 million, which is really remarkable when you look at what we acquired at the time. 47 square kilometers of patented land, which means we own surface rights and mineral rights. At the time, the resource was 900,000 ounces indicated, 300,000 ounces inferred. So we've effectively doubled it over the last 5 years. And it came with infrastructure. There's a mill on site, a tailings facility, underground access, and is permitted as a mine. So really all of those features really lend themselves towards the robust feasibility study that we just put out. Right.
Okay. So I guess that PA will kind of inform some of the numbers I'm about to ask you. So you spent $8.5 million on that over the last 5 years. You've doubled the resource. You know, I guess there's some rehabilitation costs in terms of what you inherited in terms of infrastructure. Is there, or is that all fully functioning?
Yeah, for the most part, it's fully functioning. We incorporated in the feasibility study will be a improvement to the mill. We're going to take that from 600 tons per day to 800 tons per day. We're going to modernize it with the instrumentation controls, introduce a gravity circuit, all to take advantage of some of the metallurgical results that we saw as part of the feasibility study. So there is work to be done there, but it's not just what I would call refurbishment. It's actually improving the mill to improve the production profile of the project. We're looking at effectively a new mine here. All of the development that we're putting in is new, and accessing brand new stopes and fresh rock, and so it really is a new mine that we're looking at.
Right. Okay. So, tell me about some of the plans you've got for this year. I do want to come back to some of the numbers, but tell me about what's planned for this year. You know, in relation to cash you have at the moment. I know you raised a little bit of money recently with Sprott Capital Partners, not to be confused with Sprott Global. So, why did you do that, and what's that money for?
Yeah, so that money was raised through the flow-through markets here in Canada, which provides a tax benefit to shareholders and enables us to raise money at a premium. It is directed towards exploration, and so despite the fact that we're on the cusp of production here at Pure Gold, we have not in the past, and we have no intention of really taking our foot off the pedal. We're continue to drive things forward. That money will primarily be spent on expanding the resources that we see on these new discoveries, looking to increase the confidence, convert them from inferred to indicated, and ultimately really tie into our plan, which is to try and bring those deposits forward in the mine life and look at scaling up of the infrastructure once again. You know, we've got a goal here of outlining a project that can deliver 100 to 150,000 plus ounces a year over a 10 or more year period. Again, the feasibility study is the first phase of that development plan. The PEA we put on the satellite discoveries is the next phase, and tremendous exploration upside remains on the property.
Right. Okay. Understood. So in terms of the elements which are going to cost money this year, what are those? Just in bullet point form.
Yeah, so we've got our exploration program, $5.1 million that we just raised, and that's going to be directed towards exploration, as I described. Yeah. We are out right now looking to finance the project. Again, it's a $95 million Canadian initial capital requirement, which when you look around the world of projects is really one of the lowest capital hurdles out there. And that's because we are able to take advantage of some of that existing infrastructure that's on site.
Just very quickly, what's your NPV in relation to the capex?
147 million Canadian on the base case.
Right.
And the capex?
95 million.
Okay, so that's a nice ratio right there. Okay, and giving what, an IRR of
36%.
Right. So you're well over 30 there again. Okay, those are good numbers. Okay, sorry. Please carry on with the rest of the activity.
Yeah, so we have Endeavour Financial engaged. They've been working with us on the project financing front, and there is significant interest in financing the project. Likely looking at a combination of debt and equity. The ability to leverage more debt on the project is a possibility given the infrastructure that's on site there. With that project financing solved, we would look to construct, and it is a very short implementation schedule. We're looking at about 13 months.
Right.
From go point to producing gold. And so, conceptually, if we have our finances arranged, mid this year, we'd be pouring gold by the second half of next year.
Interesting. And what sort of rates and what sort of volume, and how does that scale up in terms of cash flow?
Yeah, so it scales up from initial production in and around the 75,000 ounce range up to year 5, we're producing 125,000 ounces. And so we've got, got a core 5-year window in there where we're above 100,000 ounces a year. We're generating over $50 million in cash flow on an annual basis. And so a very strong core part of the production plan.
Okay. These are quite interesting numbers here. So it comes to the question then. So what's happening with the share price at the moment? Because it's been fairly static. High of 54, lower of 53. It's steady. Are people not interested in this story? The numbers would suggest they should be. So what's happening?
Yeah, absolutely. I think there's a bit of a market disconnect there, and clearly we're a little bit frustrated with the share price as it currently stands. I think we've suffered from a few things here in recent weeks. One is a perception that we've entered into a dull, quiet period where we need to go out and permit and construct, and there's not a lot of news flow, and that's quite typical of a mining project where you see those doldrums, if you will. Ours is very different. We have a low capital requirement, very short execution schedule, as I've described, and we're not slowing down. As I indicated, we've got a $5.1 million exploration program that we will be commencing here in the near term, and we'll continue to advance our discoveries and look to grow those resources. And so it's going to be an exciting period as we move forward. So I think we suffered a bit from that. There was some opportunistic profit taking from some shareholders, people who had been in the early days and had seen a rise from 20 cents up into the 70 cent range, and so we suffered a little bit from that as well. And then the perception that we've got to finance the project. I think those all play into where the share price is.
And what do you mean by that? What perception? What do you think that
dilution? Really looking at the potential for dilution down the road. And obviously, as a board and management group, we're concerned about that. We're all shareholders, and our key is to maximize value and minimize dilution as much as possible.
Right. And do you think the Canadian market is bored of your story?
I don't think so. I mean, when you look at the markets in general, I think, unfortunately, they're bored with the sector, and we've all suffered from that. But when you look at Pure Gold, we acquired this project, we think, in we've perfectly timed the market. There's no way conceivable that you could acquire a project like this for 8.5 million in a more buoyant market. And so we're acquiring it at a low point. Our cost of entry was quite low. We've been able to successfully raise money across the 5-year period to drill and advance the project. We've drilled over 200,000 meters. We've seen the resource double over that period. We've now got first-time disclosure of reserves with 1 million ounces at 9 grams per ton. So I wouldn't say the market's bored. We've been one of the few that have successfully raised money and moved the project forward. But we do suffer with the broader market to an extent.
So why are you looking at an AIM listing?
Yeah, it's not an AIM listing. It's the LSE main board.
Pardon me.
And really, it is to broaden the global exposure. And so we think it's an important opportunity. When you look at the landscape, there's 1,200 companies listed on the TSX or the TSX-V. You move across to the LSE, you've got 155 companies. If you look at market caps, 2 billion and less, you're down to 42 companies. So we'll be one of 42 companies. It's a real differentiator. There is a structural shift in the funding dynamics here in Canada, and really that is a move from what I would call active management into passive management. And so you've seen the growth of ETFs. Fund managers, generalists have said, well, I want some exposure to the industry. I'm not going to go out there and pick my companies. I'm going to put 8% into an ETF. And what that's done is it's drawn funding away from those active managers, and we've seen that pool of capital decline at the same time as we've seen the management assets under management for ETFs has grown to over $14 billion. So that dynamic has played into the ability to raise funds. Our story is near-term production. It's Canada. It's high grade, one of the highest grade development projects in the world. Tremendous growth opportunity organically, tremendous exploration upside, and we think that will play very well to not just the UK market, but the broader exposure that gives you across the Asian markets and elsewhere.
Right. So you think LSE kind of opens up not just Northern Europe, but also Asian market as well. So why not Singapore then?
It's a natural evolution for us. The last couple financings that we've conducted, we've seen significant involvement over in UK and in Europe, and so it's a natural evolution for us.
And have you got sort of you've been in road shows in Europe, I'm guessing, have you? Yeah.
Yes, I have.
And I mean, was this a precondition from some of the institutions? Is that what's driven your thinking as well?
No, it's not a precondition. Again, this really is about broadening that global reach. Ideally increasing liquidity and increasing our exposure. Obviously we will be a company that would be available for a UK only fund to invest in, and so that's an opportunity. It's not a precondition of any kind, though. No.
Okay, so let's look forward to this year. So talk to me about why investors should believe that you're going to deliver shareholder value, i.e., you're going to drive the share price. I mean, are we going to be looking at more institutional investing, or are you also going to be talking to retail, high net worth, and family offices? I mean, how do you drive that share price for people this year?
Yeah, we've got a broad mix of, in our register now between institutional ownership, high net worth retail ownership. We've got some strong strategic investment, including AngloGold Ashanti and Rob McEwen, founder of Goldcorp. And we'll continue to reach out to all markets moving forward. We think we're fundamentally undervalued here. When you look at, even on price to NAV basis, we look quite strong. We're in Canada. Not only that, we're in Red Lake, which is it's one of the birthplaces of mining in Canada, highest grade gold camp in North America. We've got 1 million ounces of reserves now at 9 grams per ton. That shows a very robust mine that will operate in our base case for 12 years. I have no doubt it has potential to go much beyond that. So we think that we're going to drive real value by executing on our base case, building out that first phase of development. But also, I would point to the ability to continue to grow those satellite discoveries, to incorporate them into a future mine plan, and the tremendous exploration upside we see on our property. I think those are all going to be value drivers, and again, having that low capital requirement, having significant permitting in place, and a real short implementation schedule is all going to make that value generation move fairly quickly.
Yeah, and I guess the access to capital and the cost of that capital going forward. I mean, you mentioned Rob McKeown there, obviously well known in the industry, perhaps not so much this side of the pond. Has he been part of this thinking in terms of your strategy going forward? I mean, how involved is the guy?
Yeah, I mean, we have conversations with all of our significant shareholders, keep people updated and so forth. In terms of active involvement, they are passive from that perspective, but clearly we want to keep a relationship with all of our shareholders.
Right, and do you expect them to keep investing going forward in terms of the new rounds, or are they going to sort of dilute out?
I would expect you're going to see mix in there. Some of the significant shareholders are clearly going to continue to invest and support the project, and you probably see some turnover as well, which we've seen over the last month.
Are you buying at the moment?
Management has been buying. You can look at our reporting, and we've all been buying in not only the market, but we've exercised a number of options to hold as well.
Very encouraging. So let's finish off. Give me those five. Give me those 5 reasons again, bullet point form, so people can remember why they should be investing in you.
Absolutely. Very strong mining jurisdiction. We've got what I would argue is the lowest capital intensity project out there from a development standpoint. When you look globally at a pool of 132 development projects that have an economic study completed, we're 11th highest grade, and so we're in that top percentile by grade. So we've got a really strong fundamental first phase of development here. We're going to move very quickly into production, start generating cash flow. The satellite discoveries show the ability to layer on additional production, and beyond that, we've established a mineral system that spans 5 kilometers, that's wide open at depth, and I think that this has the potential to grow for a very long time. So it's an exciting time to be a shareholder of Pure Gold.
Perfect. Thanks for the quick summary. I do appreciate catching up with you again. We'll speak to you in the next couple of months and sort of see how things progress. We look forward to seeing the share price being driven with some of that news and your outreach program. So thanks again for your time, Darin, and we'll speak to you.
Thank you.
Okay.
All right, excellent. Cheers.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest, and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.